Alrighty, so I'm going to go over a little bit to do with my trading strategy. I don't swing trade, meaning I don't take trades on the 4 hour, but I feel like this is the most applicable time frame to kind of understand what I look for on a day-to-day basis. So these purple boxes are called a whole bunch of different things. They're called imbalances, and the name of it doesn't really matter in the end of it. The easiest way to figure out what they are is they're pretty much the gaps between price. What I mean is, if you ever taken a look at the stocks like Apple, for example, you'll see that this purple box will show up in between these kind of gaps in price. All the gaps are is like market open when a stock gaps down or gaps up. Pretty much it's just unfilled price, and a lot of traders will mark out the gaps like this, and they'll look for some sort of retest into it and then take it either long or short, basically like a gap and go strategy. Basically put very simply, I trade these. They're basically inefficiencies. They're basically problems in price, low volume areas, open orders, whatever the hell you want to call it. But if you look on the volume profile, which I will show you really quick, volume profile, fixed range volume profile. Take a look right here. These gaps right here are where you see really low volume in using the volume profile, like volume shelves essentially. So a lot of the times they get filled in and then it will continue its trend down. Obviously it's not a 100% hit rate kind of thing. Nothing is like that. But if we take a look at platinum, I'll really quickly just show you what the imbalances are. These are all the imbalances, pretty self-explanatory. To explain it is, if the candle has a gap, like you look at this area, gap, there's a huge gap right here, there's a huge gap right here, where we know there's no price in between it, that is an imbalance. To draw an imbalance, you simply take the high of the lower candle on a bullish imbalance and the low of the candle above right here. When you see this gap between the high and the low, that is what we call an imbalance. And we turn the indicator on, sure enough, there it is. We look at the top one, it's the same exact thing, the high and low, and that's why you're going to see a purple box right there. It works completely the opposite for the down candles, meaning if we take a look at the low of this high candle right there, and then the high of the lower candle right here, we're going to see that there is an imbalance right there. And same thing with the higher candle low and then the lower candle high right here. That's how they're formed. You can mark them out and put them on visually. I don't do that because there is an indicator for it, simply put. But essentially what I do is I'll look for a common trend in a market, meaning we're making higher highs. And then when I say that, I mean we went from doing this simply to then going the other way. Like we're heading to the top right of the screen versus the bottom right of the screen. That's literally, it's not that simple, but the idea is if we're going down, we're usually going to continue down, or we might pull back and continue down before we continue up. And so really quickly, if all we do is plot my zones, which for a buy zone is going to be the lowest candle underneath an imbalance, meaning there's an imbalance right there on a buy candle. So then the candle underneath it is going to be my buy zone. We keep following that. This is like a buy zone right here. Imbalance, candle beneath it, we draw it out. Buy candle, candle beneath it, we draw it out. Buy candle, candle beneath it. Buy candle with an imbalance, candle beneath it, we draw it out. Buy candle, imbalance, underneath it. The zone can be any color candle. It can be a down candle, it can be an up candle. It's just the candle beneath an imbalance. And then completely the opposite, sell candles. Sell candles are sell zones, are the highest candle above an imbalance. Highest candle, above and imbalance. In these situations right here, I will draw the wick. Like, I'm not going to draw them just like that. I'll usually put the highest point right here. So if you take a look at this, my zone would be something like that. There's obviously discretion that comes into it, meaning right here, I would most likely just draw this zone like this. I wouldn't continue to make it like that. There's only, it's kind of just like not a one size fits all thing. And so when we're in here in a higher time frame, and when I say that I mean a 4 hour, and we're going bearish, meaning we're going down, I will simply mark these zones like this. And draw them out. Highest candle right here. Oops. I still didn't get tapped exactly. Pretty close. If we include like we make this a different, like a 4 hour or a 5 hour chart, it would actually have gotten tapped. And that's kind of how I'm gonna explain something in the next. If we draw a 5 hour chart, it did end up getting tapped. And these imbalances in these zones will differ based on time frames. Like if we go on a 1 day, obviously these zones aren't gonna make a ton of sense. You're like, wait, what? This would be the whole zone on the daily. It's not as simple as that. So you gotta use your own, kind of your own mind. We take a look at this whole area right here. That's how much we move down, and my zone is this size. So maybe because the zone is so small, you're gonna change the time frame to a 5 hour, 6 hour, maybe make it a little bit bigger to make, basically to like have it fit the size of the trading range that it traded. So if we traded from like this high all the way down, this size of zone makes more sense than something like super tiny like this. You can kind of take a look at this previous one. This zone is kind of big compared to the trading range it traded from like this area. And so this zone is like probably like 40% or 35% of the size, which it's kind of up to you. I go more towards middle of the road or smaller zones. So most likely I probably would have had something like this, and this would probably have been a little bit smaller, so I might not have actually seen it tap into here and then fall. So I probably would have missed that trade. But we just start marking zones. We can kind of see them working and not working. Not everything works. It's not as simple as that. Bottom candle. Oh no, it wicks through. We also cover the bottom. Something like that. We draw the zone right here. Taps into it. We draw this zone right here. It might look like a loss, but you could have probably taken a little bit of money off. Tapped right here, came back down. You draw the old one. Huge box, probably on a lower time frame. If we come back here, we can go on like a 1 hour and then find probably a smaller version of that. Let's look at that. We look at the imbalance. We can make it smaller and refine it to right there. So that makes more sense. And you can ultimately do this forever. Go on a 30-minute, and then the 30-minute is this candle. I don't think this gets tapped. Oh, it does. But you can see how like smaller zones would essentially give you more profit. But the smaller your zone is, there is a chance that you miss the move entirely, because it doesn't have to tap the top of this. It can tap this whole entire area right here. It can tap like this and then continue lower. It can go all the way up like this and then continue lower. There's no guarantee that it's going to do one or the other. Just know that the smaller zones will net you more money, and the bigger zones will let you less money. And then when you have a smaller zone, you tend to miss way more trades because it doesn't hit this small ass refinement that you do more times than it will hit the bigger one. But I'm going to just show you on one time frame really quickly. So 4 hour, just to show that this stuff works. Candle right here, imbalance candle above, imbalance right here, candle above, imbalance right here, candle above, imbalance right here, candle below to buy. And so these ones we're buying because it's the candle below. These ones we sell because it's the candle above. So if you were to aim for like a 1 to 1.5 on these trades right here, 1 to 1.5 on all of them, you would have, wow, that's really close. I'm gonna just, well, let's take a look. I mean, this is really close. Genuinely, would you have hit that? Maybe, maybe not. So we might call that a break even or a loss. We take a sell 1 to 1.5, we would have won that one. We would have won this one. We would have won this one. We would have won this one. Ultimately, depending on how you drew this zone, there's a chance you could have won this one. You would have won this trade right here. This buy down here taps into, and obviously I'm playing hindsight warrior. And so what I mean when I'm saying that is I know what happens, so I know what zones work. Like if we were to draw this zone like this and you took a buy, you probably would have lost that. It will guaranteed you would have lost that. If you took a sell here off of this zone, we need to use your brain for a second. It's like if this is the high and this is the lowest it traded, this zone is 50% of the area we went to. So when this candle got formed, we just moved all the way down here. And so does this zone this big really make a ton of sense? It doesn't. But for the sake of this, I'm just showing that these zones and this kind of stuff does actually work. And it works fucking well. Like we're gonna just continue this. We'll draw this candle right here. Taps in, goes. Next one, candle right here. Cover the low before it. And ultimately, you can pretty much pinpoint highs and lows of this pretty damn easily. Just because you can spot it does not mean you'll necessarily make money on it. There's a high, candle above it, tap into it. Imbalance, candle above it, tap into it. And obviously you're probably like, why are you taking some zones versus others? I'm simply just marking the ones that work. There are a ton in between here, like this one that didn't work. This one does work. I'm showing you like ultimately they do work probably like 50% of the time, 55% of the time. But knowing most of the times you can make 1.5 times what you risk, meaning more times if you risk $100, you can make 150 about 50% of the time, then right there that's an edge, and that's something you can trade for almost a lifetime depending if the market like displays that. There's a lot of intuition, there's a lot of context, there's a lot of experience, a lot of market time. That's something you can't buy from any course or anything that will ultimately dictate your profitability. Knowing when like something like this on the left, knowing like there is a zone up here and also right here. So does it make sense to trade the bottom zone? More times than not, I would rather miss this trade and get in up here, but then sometimes it will come in and tap this to then fall off. And so I'm okay with missing these because I know it will make my win rate higher, my trade frequency a little bit less, but I'm willing to give that up to get more accurate trades. So yeah, like even weird zones like this candle, like if you take a look at this, like is this the best kind of zone? No. This zone right down here looks a lot better, a lot cleaner than this weird candle. Sure, if you were to take this 1-to-1, which again is profitable, I've tested it, you barely take profit. But if you can make this work, it's not hard to do. Definitely will take a lot of time to kind of pick up what zones to use versus what zones not to use. Like this zone worked, whereas this zone didn't. And also using lower time frames to kind of confirm these zones, which I'll explain later. And also these small zones that you can't see. Like ultimately you're probably like, why the fuck am I using these wicks? If we go back here, we go on something probably like a 1 hour. Let's go with 30 minute. Those wicks ultimately are its own, maybe 15 minute even. 5 minute? Damn. I just gotta go back to the 15. Those wicks ultimately are its own buy and sell candle on its own little time frame. So on a lower time frame, this would be the candle. Just to prove it to you, there is a ultimately we take a look at this. Let's just go back here really quick. The imbalance stuff on. Ultimately, if you take a look, this would be the candle right here, the 15-minute imbalance candle above. Also would be this candle right here, but ultimately that's what the wicks are kind of from, and we do trade into them. And then reverse off of them. So yeah, that's what imbalances are. That's how I pick my zones. I usually use a higher time frame, like a 15-minute, 30-minute, 4-hour, 1-hour zone on something like the futures, and then trade on the 1 minute and kind of follow that trend from the zone. Today I did pretty well, about 500 bucks profit. Took very quick profits today because I didn't really have a great direction, which is something I should ultimately get a little better at. Usually these trades all end up running 1 to 1.5, 1 to 2. I just pretty much close early on the majority of them because I wasn't comfortable with the direction. I just wanted to basically get in and out rather quickly. I am profitable taking trades 1 to 1, something like a 65% win rate or something along those lines. 1 to 1. But I'm also pretty much 5% less on 1 to 1.5, 1 to 2s almost. So I'm kind of dynamic with my risk. I don't risk the same amount of money per trade. I won't do the 1% one trade a day kind of thing that most people do. I kind of think all that stuff's bullshit, and it kind of depends on your strategy, your personality, what time frames you trade, how often you want to trade, and stuff like that. But ultimately, I have pretty good stats. The last 2 months have been fucking mind-blowing, to be honest. I'm gonna add my personal account and everything like that to this, but the majority of these are just evaluations and funding companies that I'll use and have gotten a few payouts with, 5 figures plus, not to flex. But yeah, not trading forex, just trading futures. Thinking about swing trading platinum because honestly, like, platinum is unbelievable. Like it seems to be working pretty well. There's obviously win streaks and loss streaks, but take a look at this and it's like unbelievable. Like zone tap, push up, comes back into here. You're probably like, I'm sure there's a lower time frame zone. We go in the 1 hour all the way back here. Yeah. So zone at the very bottom, it taps perfectly. Push up, come back. Where do we come back to? We come back to this 1 hour right here. Oops, right there. That does tap. Trading view is just a little weird with the boxes. And you're like, okay, well, why do we come down here to this? It's because we have this zone right here. Candle. I mean, like, it's pretty unbelievable. We're bullish, super bullish in the market. Probably would take this zone right here, and then a loss. This zone's a win, this one's a win. And I mean, if you hold these winners, if you risk $100 here, $1,000 on this trade, something like that, stop super small. I mean, that's potentially $25,000 on a crazy trade like that. Never are you gonna top ticket, bottom ticket like that. That's basically like Excel sheet money saying that. But like, we could refine this zone on the 1 hour, make our risk super small. Boom, taps perfectly, pushes up, comes back, taps into here, and as long as you follow the overall trend, looking for buys instead of sells, you ultimately will be better off than that. Sure, you'll get a sell here, that will work, make 2 to 1, 3 to 1, 4 to 1. Sure, you're gonna get a sell here. Ultimately, sticking in these buys is the better chance because we are going up. And then what happens? We go up, we go up, we go up, and then we start showing direction to go kind of downwards. And so at that point is when you shift your idea of buys and you shift them to sells. Pretty crazy, huh? Never heard of that one before. This zone, where do we stop? Right here. We go in the 4 hour, make it a little bit bigger. That is ultimately what we're doing. And so if we were to buy, I'm buying up into here. This is where I can potentially look for sells. And then also right here, 8 hour, yeah, something like that. You can aim to sell on this. Anyways, where do we stop? Where did this wick into? We look to the right, or the left, sorry. Stops right here. And ultimately this stuff is like actually crazy how this works. Like we mark this over here. That's where price stops. And you can get 1 to 2s, 1 to 3s, 1 to 4s, 1 to 5s on this. It's kind of crazy how much potential is here. Anyways, just message me on Instagram. I'll have it in the description if you have any questions. or just look up Arzane, Arzane, on Discord if you have questions. I don't charge anything. I enjoy this stuff. It's kind of like a big puzzle to me. So let me know. Yeah. Thank you for watching.